Most entrepreneurs leave thousands of dollars on the table each year. And it's not because they're bad with business, it's because they don't know what they can write off. Hey there, I'm Chika. I'm a CPA with over 16 years of experience. If you're new to my channel, go ahead and subscribe so you don't miss out on any of this amazing tax and business tips. In today's video, I'm breaking down 3 tax write-offs that you're probably missing, and I'll show you where you can get 4 more write-offs to ensure that you're maximizing your deductions. So let's get right on into it. So here's the thing. Most entrepreneurs, they're not trying to cheat the system. They're not trying to avoid their taxes. They're just not sure what they can write off. So they end up claiming obvious things, which is great. Things such as software, subscriptions, business meals, website for their business, and they tend to just leave it at that. But there's so many more deductions that you're entitled to. And if you don't know about them, then of course you don't claim them, which means you're paying more in taxes than you need to pay. So today I'm going to walk you through 3 specific write-offs that most people miss. Then I'll show you where you can get 4 more. All right. So here's write-off number 1, the home office deduction. If you work from home, you can write off part of your rent or mortgage, your utilities, your internet, and different things related to the home. But a lot of people don't claim it because they think that it's complicated, they think they don't qualify, or they think that it's going to cause the IRS to audit them, to come after them. But that's not true. And so here's what you need to qualify for the home office deduction. For one, you need space in your home that you use exclusively for business. It doesn't have to be the full room, it can be a corner of the living room space, right? But this specific corner is your home office. Okay. As long as you use this space for business and nothing else, then you qualify. So make sure you use that space regularly for business and exclusively for business, not just once a month, but again, regularly. This is where you work. If you're not in this space, you're not working. So here's how you calculate this deduction. So the IRS gives you 2 options for calculating the home office expense. Number 1, they call it the simple method. And this is where you apply the square footage of your business space and multiply it by $5. But the maximum deduction, if you use the simple method, is $1,500, right? $1,500. And so yes, it's simple to calculate, but you're limited to $1,500. And with clients, I tend to notice that their home office deduction tends to be more than $1,500, which makes sense that we want to go with option 2 because we want to maximize our deductions. It's not as simple, but it's called the actual expense because now we're looking at, well, how much did you actually spend? And you have to do the calculations. So the way you figure it out with the actual method is you calculate what percentage of your home that you use for business, and you deduct that percentage of your rent, your mortgage, your utilities, insurance, what else? Internet, things like that. So again, with the actual method, you tend to get a greater deduction or a greater write-off. And so it's always good to figure out what your actual deduction is. And if it's greater than 1,500, then for sure you want to use the actual method. So here's an example. Let's say your home office is 150 square feet and we want to use the simple method. So with the simple method, again, it's $5 times the square footage of your home office area. So 150 times $5 is $750. That means your deduction is $750. That's it. That's your home office deduction. But now let's apply the actual method. So let's say that your overall home is 1,500 square feet. And remember, your home office is 150 square feet. That means your home office is about 10% of the space of your home. So now we apply that 10% to what you actually spend in the home. So think about it. Most people, they skip the actual method because they think it's too complicated, but it's not. And it can save you much, much more, thousands more. So here's an example using the actual method. So I had a client. She came to me first year working together. She's a sole proprietor. She sells art, beautiful art. And I reviewed her tax return and noticed, okay, she works from home, but she's not deducting the home office. She's not taking that deduction. So I asked her for the information that I needed to figure out, okay, what could her home office deduction be? What's the potential? And so once she filled it out, she gave it back to me. I ran the numbers and we were able to add $3,000 home office deduction to her return. And once you apply her tax rate, that ended up saving her $1,000 in actual cash. Okay. Now think about it. You might be thinking, oh, only $1,000, whatever. But no, that's $1,000 every single year. So as her business grows, that means her profit grows. So the home office deduction is also going to grow. Okay. So her savings will grow year after year after year. Now, of course, I'm glad that we caught it early for her. And I want you to catch it early for yourself as well, because the earlier you catch it, that's when you can claim it year after year and save more and more. Of course, it's the power of knowing that you can write this off if you work regularly and have an exclusive area in your home where you work. So now let's get into write off number two. Professional development. This one tends to be new to many people. Professional development includes things like courses, group programs, coaching, books, going to conferences, paying for 12-month masterminds. All of those things are helping you in your business. So all those things are deductible. A lot of people, they don't think to claim it. They think, wait, can I really write off a $10,000 mastermind? Yes, yes, because what's the purpose of you investing in that mastermind? It was for you to improve your sales strategy. Your sales strategy is related to business. You want to increase your revenue, right? So it's literally directly to business. So yes, it is a deduction. Yes, you can claim that. Now let's talk about what qualifies. So any type of like education or training that helps you maintain or improve your skills in your business. So again, that's going to be business related courses, whether it's marketing, sales, hiring, operations, coaching programs, books that are business related, conferences and events that you attend, memberships to professional organizations. I'm part of the AICPA membership, so that's deductible for me. Okay. All those things that I just said are deductible. Now, here's what doesn't qualify. So, if it's education that you spend money on that will qualify you for a new profession, a totally different profession, right? That doesn't qualify. So let's say you're a graphic designer and you take a course on graphic design. Okay, that qualifies, right? Because it's helping you improve your current skills in your current business. But if you're a graphic designer and you're trying to go to law school, so you're taking this course on law, that's not deductible. Okay. What that is training for a new career. So that's completely different. That's a completely different situation. Now, let's go into write off number three. Write off number three is health insurance premiums. We have to have health insurance, right? Many of us have health insurance, but we don't realize that it's a business deduction. So if you're self-employed, you're a sole proprietor, you're a single member LLC, and you pay for your own health insurance, then you can deduct your premiums. So, and premiums can get hefty. Premiums can be like $300, $500 per month. So it's not cheap. It's not cheap. And think about a health insurance premium is it's not deductible as a business expense. It's deductible as a personal deduction on your tax return. And of course, many people, they miss this one because they don't realize that it exists, that they can deduct it. They think because it's personal, they can't take it. But because you're self-employed, you can take it. I know the tax code can be complicated like that. So here's how it works. So if you're self-employed, that means you're sole proprietor, single member LLC, or even an S corp owner. And this part is also very important. You're self-employed and you're not eligible for health insurance on your spouse's health insurance plan, right? Let's say your spouse is an employee for a big corporation. You're not eligible to be on their plan. Then yes, you can deduct your health insurance premiums. But let's say you're self-employed and you are eligible to have health insurance through your spouse's plan, but you decide you don't want it, then it's not deductible to you because you're eligible, but you're choosing not to. So that's really important to note. Okay. Now, what type of insurance counts? It includes medical insurance. So health medical insurance premiums, dental insurance premiums, vision. You wear glasses. I know that's a big one. Even long-term care insurance. There's some limits with some of these, but for the most part, just know if you're self-employed, you're not eligible for anybody else's insurance plan, then you can take the health insurance premium deduction as a self-employed person. Okay. This one adds up because here I am in California. And so health insurance premiums is like $500 a month, single person. And that's $6,000 a year. In a 30% tax bracket, I'm looking at close to $2,000 in cash that I can get back, right? Saved taxes. So that one is huge. And I get so excited when I notice that, oh, they're not taking their health insurance premiums because, again, it's linked to so much cash savings. That's a big one. Huge. All right. So those are the three. But as I mentioned earlier, there's four more write-offs that most entrepreneurs miss. Things like your car, software subscriptions, retirement contributions, and more. And all seven of these are part of my free ultimate tax write-off checklist. In this checklist, it breaks down each deduction, what qualifies, how to document it, how much you can save. And with the checklist, you also get 7 bonus videos. And each of these videos, I dive deeper into the who, the what, the when, the how for each write-off. I literally create a story for each write-off of a business owner and how she deducts each one of these. So if you're sitting here wondering like, okay, how do I put this into action, Chika? I need a visual. Boom. You need that checklist, which includes those bonus videos that are unlocked once you download the checklist. So check it out. It's in the description. Okay, with that said, you want to make sure that you're not leaving money on the table. So go ahead, grab my free ultimate tax write-off checklist. You can grab it for free. The link is in the description below. And if you found this video helpful, go ahead, subscribe to the channel, like the video, and comment which of the 3 deductions really gave you insight as to how it works. Tell me below. And if you want more videos like this, put a thumbs up emoji below. Let me know. All right. Until next time, peace.